man? I'm not always late. I'm always here. It's just I'm not saying anything. Welcome, ladies and gentlemen. What an FOMC, huh? For one time, right, I was actually really looking forward to hearing Powell speak. I mean, it was one of those very interesting live streams. Some of the questions were just pretty dead, but they were all focused on the tariffs. Now, the stock market saw success of it yesterday, right? So did Bitcoin. But then it just came straight back down. Nasdaq's taking a little bit of a tumbler. Euro's taking a bit of a move lower. Unemployment claims coming in lower. We got Trump talking today at some point with the crypto summit to talk about. I don't know, man. Is it going to be a pump and dump? Ideally, if Bitcoin drops before that summit, then that is a very good sign that price will probably shoot back up. So you really want to encourage Bitcoin to go down as much as it physically can today. What we're going to talk about? Well, we're just going to get ourselves prepared for post FOMC. What does it mean? What can we expect moving forward now that we know that the Federal Reserve is pretty much sat? Mad love to you, Victoria Spray. Didn't have to do that, man. Thank you. That the Federal Reserve right now is giving investors the idea that, yeah, we're not too worried about the tariffs and inflation because it's not going to be something that can really impact it. But there is tariff inflation, non-tariff inflation. And then it's like, okay, so what is it? What are we going? What's the problem then? Just cut your rates, man. If you're not worried about tariffs, and then there's uncertainty all over the place. Boy, ladies and gentlemen, we'll get straight into it in today's live stream, guys. Moving on from that, we're going to just dive into a little bit of Bitcoin price action. And I just want to know, sorry about last night with the camera and what have you. What am I talking about? I'm talking about this. Ladies and gentlemen, I got vectored yesterday. So, yeah, even Powell was like, what the hell's going on here? Like, why is this guy turned blue? So that is right there, me getting vectored. There's the blue vector candle. There's the green vector down there. Even the violet vector candle. I mean, that is just, you couldn't even predict it, man. But yeah, I apologize for that madness. But just going into it all. So equities have fallen on the doubts that the Federal Reserve can significantly cut rates in the face of potential inflationary trade tariffs. So yesterday, we got the idea that they're going to give us 3.9% is the rate that we're looking for with a 50 basis point cut in the future. So at what point are they going to do it? Well, remember, the tariffs are yet to get in play, and we've got April 2nd coming, and we've also got the start of a new quarter coming. And what investors, and I said it this morning, the true aspect to whether there is a bull market or a bear market is whether investors' expectations of corporate America is going to continue to do well. We know that NVIDIA is just doing its own thing, releasing new computers, new graphics cards, and they're just getting everybody excited. But that's just NVIDIA. Yes, it has a $3 trillion market cap. Yes, it is really the monopoly in the AI space. But usually what happens in the stock market is if you get the leaders moving, then you'll get, of course, the other guys moving, as in the small caps. But it's just one stock, and is that going to be enough to sustain a bull run? Are investors' expectations of the next quarter in earnings going to really give people the optimism to start getting involved in buying? Is this the dip? Okay. So we're going to understand that logic. You've got to understand that logic as you go in and about your day when you are trading. So here we go. It goes on to the story, and it was the stock market has come back from a smack, as it says here, 4-week stretch in which the S&P slid into a correction. And it says the following here. This is important. The fact that the Fed chair didn't play to recessionary fear helped sentiment. All right. So if the Fed's not talking about recession, it doesn't mean that the US can't go into a recession. So how do we identify it? Going into the price section right now, you can see BTC is doing all right. We do have this story, okay? President Trump to address the Digital Assets Summit tomorrow. So that is today. And we're just going to be listening to keywords. US is going to buy 1 million Bitcoin. That's all we need to hear. And then once we do get that information, given that he did mention before that he's going to start a crypto strategic reserve, Bitcoin pumped, and then it came back down again. But what's the difference between Trump talking about the crypto reserve and Bitcoin pumping and the stock market getting a lifeline yesterday, but then simply coming back down? Investors are short term. They're not looking to keep risk locked in for a long time. How do we identify this? Well, just going into the chart right now, guys, you can see here that investors are seeing that volatility index is starting to go up. So investors are starting to hedge themselves. All right. If this is going up, that's bad news for the market. Investors have an expectation that it's not looking good. So they're now protecting themselves. Okay. So VIX is going up. You can see the futures markets right here. This is the ProShares short-term futures ETF. Okay. So that's going to be coming into play to the upside because the VIX is going up. On top of that, NASDAQ taking a bit of a tumbler to the downside. S&P taking a tumbler to the downside. So it looks like everything's coming down. And what did we say? Investors are short term. What are they doing? They're selling the rallies. Here is your rally. Done. Here is your rally. Done. Right? Now, realistically, you want to see the S&P holding out in these ranges, okay? And as long as they can consolidate well in these zones, then the idea is that the market may have found its footing to suggest higher prices. So what's my price projection about? Well, it's not quite frankly mine. Arthur's back. He's now adjusted his prediction to say that Bitcoin will go to 77K before it then makes a move to the upside. How many of you are in line with what Arthur says? Now, he just makes a projection. He said Bitcoin reclaimed the 86 mark while XRP saw 10% after Ripple's lead victory. Happy days. And then Arthur says that he predicts 77K as the Bitcoin cycle bottom. All right, then. Cool. So let's look at the idea that that could be the case. Go to Bitcoin on the higher time frames and look at where we are. You can see that, as I said before, unless Bitcoin gets above the 50 EMA on the daily time frame, which is this area here, there's no reason to start buying Bitcoin. If you're going to buy Bitcoin just to make money on 3-4 grand moves, okay. But if you are trying to buy Bitcoin on spot to improve the odds of your DCA working in your favor, that means that you really need to see Bitcoin going up from here to retrace into moving averages to then continue to the upside, because then it would then find itself support. Now, if you're going to really take the idea of spot trading with the hybrid system, you really need to see Bitcoin breaking each and every one of these blocks. Here is an example of how to use this strategy for spot trading. This is only for spot trading, ladies and gentlemen, okay? In front of you are 2 block areas in the chart. Now, just stick with me on this one, okay? The block principle says that if you've got a candlestick like this, a red vector candle, right? It tells you that that's the point when the market had started to build its longs. So they were marking prices lower, okay? Now, with that being said, when price drops down and then it continues to drop down, in that chart right there is a part of history where people were encouraged to buy, okay? Now, with that being said, how do we use this area in the future to determine that the same behavior won't be happening in the future? In other words, how do we not know that price will come up to here and then sell off again? That's the market's memory, okay? So what you're looking for is this. With the blocks, all of you that are on spot or trying to trade spot, highlight these price points right here, okay? These price points at the following. I'll read it out to you all. So first one would be 84,056. Next one would be 88,754. One after that is 91,483. The other one is 96,181. Mark those on your chart. Those are your vector candle ranges, okay? What you're looking for is this. You want to see Bitcoin to the idea that it's going to go up. You need to see Bitcoin holding this block, okay? It needs to be holding that range. Given the fact that it is volatile, give it a little bit of freedom to do some stop runs and what have you. But most of the time, you are looking for Bitcoin to hold the block at this low. Then as it goes higher, hypothetically, you're buying spot in here. As it goes higher, you're going to be paying attention to how it behaves in this range. If you notice in this range here, it's starting to have a little bit of a problem and it starts pulling back aggressively, you'll know that that point in the vector is a point where the market's memory is being triggered to mark Bitcoin down again. So it's being triggered. The bids are coming in. Price drops from there. If you don't see that and you then see price working its way away from that point, then we're going into the next vector block. That next vector block, same story. You're looking for price to consolidate in and around that range where the vector block finished. And if it can succeed that point, and start coming away from it, you've got yourself another base, which is saying to you that the guys who are bidding price there are no longer interested in bidding. What are they interested in? Offering. That means they want higher prices. So you have effectively got yourself one zone to buy Bitcoin from, another zone to buy Bitcoin from, and then another zone right here to buy Bitcoin from, which logic says that if price does manage to come away from these zones and clear further away and break away from this red vector candle block high, then you've got yourself a good chance and belief that Bitcoin will continue towards the next spot in the chart where the history of the market would likely repeat itself. People will say that you're dealing with hindsight here, Tino. Of course I am. But don't tell me that the market isn't going to repeat the same thing, because it will. Let me explain. In front of you, you've got this green vector candle block over here. And what does that candlestick say to you? That says to you the same principle, okay? It says to you that at that time, that's where people were interested in offering Bitcoin. So they were selling Bitcoin at the highest possible point. So if Bitcoin's price comes all the way up to here, what would you naturally expect? You'd expect Bitcoin to get aggressive and move away from that point, which would effectively give it the attempt towards its all-time high. Don't you notice that just before an all-time high is taken, price usually tends to get a little bit aggressive and it moves towards that point with speed? That logic there says to you that the green vector candle is going to be something in the future that could lead price to continue higher. If you then see price doing this, consolidating at that point, even consolidating at this point over here, then the idea is that the guys who are originally in there are no longer present. So then that means you could start selling your Bitcoin from that point and get out and wait for the next retrace. Because by the time price comes all the way up to here, there will be another block. There will be another vector that you can do exactly the same thing with. Now, if you don't believe that there's something that actually does apply, go back in the chart and just put the logic to the test. Look at the red vector candle right here. Look at the violet vector candle right here. Okay? This is where they were buying. Notice how at this point here on the right, violet vector candle, what the hell's going on there? Yeah, look at that. Notice how they come back up towards this vector zone and they're just consolidating in that area. There was no real conviction. So you're using that vector candle low as a range. You see this candlestick coming away. So hold on. What's it done there? It's repeated what it did over here. Because the market's memory at that point in time was saying that this is where we want to bid from. When I say bid, I'm talking about this. Look at the bids here. These are the bids. Notice, if you want to understand the logic of market memory, you go back in the chart and look at places in the chart where Bitcoin had bidded from, okay? So you've got bids over here. For God's sake, that thing winds me up. Can you see this point here? That's a bid zone. Funnily enough, it's the same zone. Bids, market memory, bids, and then it comes down. So then if you look across, you see that that's where they effectively sent price higher from. So all these guys have been doing their buying and then they sold it as it went up. So we can't say that the market's not going to repeat the same thing. No, it will always repeat the same thing, but we just need to pinpoint that moment that it does decide to do it. Are we all on the same page? Robots, show yourselves now or shatter out of existence. Any questions, ladies and gentlemen? 77,000 is the real target. I mean, look, man, it is the real target, quite frankly. Let's just get into that right now. So that was a little bit of a strategy for you there, guys, for the spot holders. 77,000 is the real low, okay? So we've already claimed the 77,000 region, okay? Now, let's just hypothetically make the assumption that that is it. That's it. So in other words, one more attempt towards that low would then set Bitcoin as the bottom. That could effectively give us a structure like a W formation, hypothetically, to then try and make the move higher, okay? Cool. However, what do we do about this range down here? So 69,298. So if Arthur Hayes does look back and retract on his statement that he expects it to be 77,000 as opposed to 70, then we've got to look at the order flow and determine, are we actually going to see Bitcoin going lower? What is it that you're seeing right now? Go back into the live streams every single day since Thursday last week, okay? Now look at it. What is it that we've been seeing? we've been seeing that the bids are starting to pull the orders. Now you're starting to see lots of gaps. Was this not like bright green yesterday? Was it not bright green? Wait a second. I'll show you right now. Where is it? Where is it? Here we go. I had it just there. Where are you? Bitcoin, come on. Give me your offers. Where are your bids? There we are. I just had it. Come on, man. Stop talking. There we go. There you go. Look at that. Look how bright that is. And what we were saying at this point in the live stream was, if we really expect Bitcoin to continue up, or if we don't want Bitcoin to go lower, then these guys need to start disappearing and change their belief that prices are going to continue higher and they're going to want to get their bids in sooner. That's exactly what's going on here. Can you see all the gaps? Your orders are being pulled. They're pulling away from their orders. The logic says that they could try and get them filled here, but there's nothing even going on there. But the significant thing is they're pulling orders from this range. Yeah, we got a little cluster down here, 20 million at 65, and then we got another 25 million at 63. Going up here, we got 46 million at 66,666. What a dude. Who on earth would do that? 20 million at 67. So the logic is that the guys are removing orders from the book. Now, if they're removing orders from the book, the expectation is that it could go higher. We need to wait and see if that's going to be the case. Does that make sense? Tino, what would be your current opinion on USD JPY? You used to talk a lot about it, but stopped. Yeah, I separated from USD JPY. Actually haven't, to be fair. Dollar yen. Dollar yen is just... If you're really going to learn how to trade, guys, then focusing on dollar yen, that's where I started off. I started off scalping dollar yen, and that's where my home is, right? But dollar yen right now is on a trajectory to start marking lower. When you're looking at dollar yen, you've got to pay attention to the yen because, of course, it works inversely to it. When the dollar goes up, the yen goes down. When the yen goes up, the dollar goes down, okay? But looking at dollar yen right now, it is in areas where the Bank of Japan doesn't really need to be worried about Forex intervention, okay? It's when it gets above 50, when it gets above the 50 mark, that's when we start having a bit of a concern that the Bank of Japan are going to buy dollars to effectively reduce the value of the yen, dollar yen that is, to take that's Forex intervention, okay? So anytime Japan steps in and intervenes, the dollar goes down. Dollar yen goes down, the yen goes up. And they do that because an expensive dollar yen, it doesn't work for them in trade, okay? But you've got other things that are brewing right now. We've got the carry trade and the possibility that in May, the Bank of Japan could be increasing the interest rates if their CPI inflation data does suggest that things are okay. If it shows that inflation's going up in Japan, we're going to have ourselves another carry trade unwind where the yen will shoot up, their 10-year bonds will shoot up, the US bond market will go up, and the euro will continue its madness to the upside. So, yeah, we've got to be mindful with that. But dollar yen, I think right now what's going on across the board is the pressure from investors on investors about the fact that tariffs are going to be having an impact on everything. It's going to be putting pressure on the dollar to the downside. You even go over to dollar itself on the index, and you can see that even though we've got this nice move up and then we've got this correction back down again, until we get the tariffs coming into play and they go into full force, we're not going to really truly know if the dollar is going to be impacted by it unless we get the tariffs in force. Okay, so that means, where do I expect it to go? I do expect dollar to get back down towards this range, the 101 mark, testing the 1% zone itself. That's where I expect it to go. That would then send the euro to 1.100, and then you've got the yen moving up. And then, of course, that should then start resetting things, and then everyone's expectations on the inflation of tariffs. And then we'll just go to another FOMC and Powell won't really say anything. And then the markets are still going to be getting the premium on the US dollar. As you can see, the 2-year yields, they are down, right? 2-year yields are down. This is important. This is how you're going to be able to understand what your day is going to be like. 2-year yield is down 3.9%, right? 10-year yield is down 4.17%. The bonds market is going up. Dollar is going up. The stock market is down. That tells you what? It tells you that everyone is going into safe havens. They are concerned about things. Okay? So that's why they're going over into the bonds. What you're looking for is the bonds to go up, the stock market to go up, and the yields to go down. The stock market only goes down if the yields go up. But what you're seeing here is that there's a change in the way money is being moved. They're favoring lower risk. And that was because of yesterday's FOMC. They're not fussed about the inflation rate with the tariffs, but investors are. And they don't want to know that there is a possibility that the earnings season that starts in the next quarter is going to be impacted by this inflation story and tariffs. Because if it is, earnings expectations are going to be going, they've got to be set high anyway, okay? But they may not get hit and will go into a earnings recession where companies are just not delivering results. That's going to kill sentiment. Investors are going to get rid of that stock and then go into much more safer practices like ETFs, maybe even cash, okay? And that's what's got investors concerned about the Fed's approach. That's where we are with that, ladies and gentlemen. So when you understand that macro, as I said earlier on, the only way that you can truly determine if everything is good, if people are consuming, and if companies are declaring profits and hitting expectations, that tells you the economy is doing good from a business and a consumer's point of view. But if they're not delivering, then investors will see that there is a slowdown in the economy. Forget your inflations, forget all of that in employment markets. You've had unemployment rates so significantly low to the point where the labor market is great, all right? Yes, the Fed is projecting 4.4% in the future. That is nothing. That needs to be so much more significantly higher for the Fed to do something about it, but it's not. So that means they're projecting that, yeah, we are going to have a strong labor market. That means, yeah, we're going to keep interest rates relatively high. Even if we do go down to 3.9%, that's still a high number. But it's inflation. What's inflation going to be doing? Any questions, guys? Trump is giving a speech to crypto today. Yeah, look, when Trump gives this speech on cryptocurrency today, ladies and gentlemen, you know, I would say just be very cautious about it. It could, and I mean, how many of you are of the impression that this is going to be another sell the news event? Like I said, we need Bitcoin to drop down, okay? We need it to really drop to suggest the idea that the crypto event is going to come into play. I mean, you've got Coinbase selling 12,000, go away. Coinbase selling 12,652 ETH. Why have you done that? Equity funds see the largest 4-week inflows of the decade as interest shifts from US stocks. That's not good. Understand what that is? That's taking away from the dollar. Trump don't like that. And that's why the US doesn't like the euro, because they've got alternative markets. Some of you, there's a little bit of game on this. Pay close attention, especially when you're scalping NASDAQ. Let me explain. The carry trade principle says that I'm going to borrow yen and then convert it over to dollars. And then I get those dollars and I put them into the stock market, right? That's a carry. You also get exactly the same thing with the euro. So that means right now, I look at the chart of the euro and I say, where are we at? Euro's going down. Euro's at 1.0823, okay? How many euros can I get now with my dollar? Looks like I can get quite a few euros with my dollar. All right, cool. Rather than losing on the currency of the euro, what I can do is take advantage of being able to buy more euros with my strong dollar and then go and get more European stock. Okay? That's what's happening with regards to this, right? However, how do you identify that? Well, some of you use this correlation story, okay? Some of you might use SMT, okay? The idea is that when the NASDAQ, okay, is moving up, right? When it's moving up and you look at the euro and that's moving down, investors are transacting on euro based on value of the rate of the euro. Yeah? They're using their euros and converting them back into dollars to take advantage of the fact that the euro is strong now and the dollar's starting to climb up, convert it to dollars, buy some US stock. So I've now got more purchasing power on dollars to get stock, which means I can own more stock. When you're trading NASDAQ and you're trading euro, watch for that relationship, because you'll find that when NASDAQ is going down and the euro's going down, right now, you're coming to the assumption that it's not looking good because NASDAQ is down, the bonds market's going up, 10-year futures, they're trading higher. Investors are scared. So you've already got a sentiment in the chart right now, okay? When you're looking at the NASDAQ going down and the euro going down, that carry trade ain't happening. But you'll know it starts happening when the NASDAQ goes up, the euro goes down, and the dollar goes up. So when you see that happening, you're then getting the idea that investors are effectively selling their euros, converting it to dollars to put those dollars to work. And that's when the NASDAQ will go up. What you're witnessing right now is they are selling their euros and they're selling their US stock, and they're going into dollars, and dollars are being put into the bonds because investors are scared. Are we all on the same page with that? Yeah? Does that make sense? Let's have a look at BTC. Not doing too badly. Market is open. NASDAQ's going lower. Euro's trailing lower. Might have a bit of a wickable story today. Does that make sense, gang? If the dollar goes down only, the companies that operate big in other countries are the only ones will benefit, right? That's correct. If you're talking about trade, then yeah. Tino, dollar will be 1-for-1 with the euro. Euro back to parity? Probably. Yep, probably. Makes sense. How you doing, man? Because dollar is weak, NASDAQ benefit, but S&P could not, right? Well, it depends, man, because NASDAQ is made up of a lot of tech stocks, okay? And they're subject to changes in interest rates, of course. So the thing is, with the NASDAQ, there aren't many investors that will sit too long in NASDAQ. They don't even need to buy much of a stock to see it move. That's why the NASDAQ is so volatile. The S&P is impacted more so because it's made up of a lot of blue chip companies that rely on trade overseas. So the value of the dollar is really important for them, you know? So if I have USD now, when do you think it will be smart to exchange them to euros? I mean, you've got to consider that the euro right now is taking a bit of a tumble to the downside, okay? And euro's rally to the upside is this whole German spending, all right? Euro, the one thing with currency pairs and Forex is they respect value. You hear about some of the greatest traders on earth that believed that certain things were overvalued. Like look at George Soros. He made like $1 billion in one trade, and that was on the expectation that the pound was overvalued, right? The euro is exactly the same thing. If there is a visible view that the currency pair is so overvalued, not from an indicator's point of view, it's been trailing upwards and value has been locked into this asset, there's going to be an instance where investors are going to start taking advantage of that. And that might mean them going over to this right here, where they take advantage of the swap rates, okay? That's what could lead euro to come back up. Look, they're changing the actual days till expiry, okay? So in the future, they expect euro to go up. So that means that euro could correct down to then find itself its footing and then try and make a recovery back up to try and claim out the 1.10 region, okay? So it's all going to be events that could lead that. But right now, the euro is deemed as overvalued. Before you consider the idea of a pattern, you've got to consider, why does the pattern play out? Because it's deemed as overvalued in relation to the dollar itself, okay? Dollar has been holding out these lows really well, okay? And now it looks like investors are triggered on value that I can get a decent amount of euros if I exchange my dollars now to euros. Okay, and if I sell my euros, I can get a decent amount of dollars. Get those dollars, chuck them somewhere. Where am I going to go? Well, I'm going to go over to the bonds market because I'm a little bit scared about things. Does that make sense? It's just mainly Forex, man. Mainly Forex, crypto, and the futures markets. I don't really touch the European stocks, man. I don't really touch them. They're not really that volatile for me, if I'm quite frank with you. Any other questions, guys? Just before we continue on, remember, guys, you can take advantage of this play. You can trade NASDAQ, S&P, Bitcoin. Where is it? Can I go into it? There we go. With BTCC. So remember, you can do all of that. Trade stock as well. Trade gold. We'll look at gold in a split second. But if you do decide to join BTCC, you get yourself a 10% deposit bonus on that. All right. And that is paid out on a Wednesday. And it's only up to 10K. So if you put 100K in, you only get 10K. Anything else after that? No, they're not going to do anything with that. But don't need KYC and you don't need a VPN for it either. So it's ideal for anyone in the US and beyond. Okay. Now, just go over into Bitcoin. We can see it's doing relatively well here. We got some relatively decent price action. Bitcoin trying to spike up. Got a green vector candle right there, which I do like, but I don't like. And what I'm not liking about it is the fact that if it can't get above the 50 EMA, then it could be like a fake move to the upside. Looking at how things are, the NASDAQ is moving up, so that's good news for us. Everything seems to be marking up now from their lows, which is a good story. So far, so good. Okay, but they need to really contain this and continue, because if they can't, then they're just going to recover everything and roll over, in my opinion. Oh yeah, Kraken. Did you hear about that? Kraken has effectively purchased NinjaTrader. That is wild. So now NinjaTrader, guys, like myself, we're going to get the option to use crypto. We can do a little bit more, which will be interesting. Tingo. Will he screw us over if we buy now? Listen, if you guys are going to trade into this meeting that Trump is going to have, what do you expect him to say? Look, it says here, President Donald Trump will make history as the first sitting U.S. president to speak at a Bitcoin crypto conference, delivering remarks at Blockworks Digital Asset Summit. Okay? Says here that we've got, even like here, just in, Congressman Tom said he believes that strategic Bitcoin reserve bill to buy 1 million Bitcoin will be enacted. So you're effectively listening in to hear if they are going to say yes. It says here, we talked about ways of acquiring more Bitcoin in budget neutral ways. We want as much as we can get. So there's going to be a budget. What you're looking for in relation to this DAS, which is the summit, are the key words. We're going to buy Bitcoin. Why do you need to hear those words? Because that's going to be the reason why Bitcoin will shoot up. Once that shoot up happens, then you're going to have to pay attention to the chart. Because if you're buying whilst they're saying we're going to buy Bitcoin, they certainly ain't going to be buying Bitcoin when it's pumping. Retail's going to be buying it, excited that Bitcoin's pumped, and then it will just take a shoe bag to the downside, and then that's when they'll start buying. Speaking of buying, the ETF, 68,000 is coming up again. What's going on there? So 568,000 going into it. We've seen a lot of activity. Coinbase Prime has put in quite a bit of Bitcoin for BlackRock. I guess that was yesterday. Okay, Bitwise has been doing a little bit of... What the f*** are you doing, man? Oh, God, I know what that is. Anyways, yeah. So Bitwise has been doing a little bit of maneuvering. Going over into the Glassnode, we've seen the inflows coming in a little bit higher from yesterday. So we have 265 million in inflows. So far, so good. We haven't had that many corrective days on the ETF since the last one, which was on March the 10th, where we had over $1 billion worth of net flows to the outside. So yeah, it's going to be an interesting one to see how this ETF, this crypto summit is going to be giving Bitcoin freedom to make a move. But guys, listen, you might want to buy Bitcoin and trade the event of this crypto summit. So Bitcoin could be moving up and down, right? If you do decide to trade it and you experience a profit on the news announcement, then please take something off the table, because the market is short term. If people have an expectation that the economy is not looking good in the future, okay, then there is a possibility that Bitcoin's going to shoot up to only come back down and continue to come down, okay? Now, yeah, you can play the idea of Bitcoin and it's the future and all of that stuff, but that doesn't change the fact that people's view on its value will continuously be changing. And that value could be lower, that value could be higher, but don't get caught out in the idea of the value in the sense where it can only go up. You're going to be setting yourself up for failure. So if you do exploit this sort of behavior, just make sure you're paying yourself take some money off the table. And once he says the keywords, we're going to be buying Bitcoin, then you've obviously got to wait for the bill to get passed. It's got to go through the Senate, Congress, and all of that fun and games. Once we know that they are buying it and it's in the process to start making those purchases, then you can start looking at your glass nodes and your Arkhams and look for the wallet addresses and see where the actual amount is. That's the hard evidence that they're doing it. Right now, this is all speculation, okay? So just be careful when you are trading it, all right? Cool. Tino, is using the DOM better at the 10-second, 1 minute to scalp or at higher time frames like the 5 minute? The DOM itself, right? It's not a time frame thing, okay? That's the DOM, okay? It's just ticks. There's no time. You're not time sensitive on the DOM. What do I mean by that? Well, I'm looking at this, and do I have any concept of time? No. Do I know what the time is? Yeah, it's now 22. But I don't have any concept of time when I'm looking at the DOM. How quick it changes. Look, it could spend 2 seconds here, 4 seconds, 5, 6, 7, 8, 9. Okay, 9 seconds before it moved. It could spend 3 seconds here before it moves up again, 5 seconds before it goes down again. So that's what you got to understand. And when you're looking at it from this perspective, when you're looking at as a time-based trader, yeah, 10-second chart, depending on how liquid your asset is going to be kind of tricky, but I'd stick to the 15 or the 30-second chart. And of course, the 1 minute chart for those kind of traders would be your daily bias chart or daily time frame. You know, that's how I see it. Tino, what was the most insightful thing that you added to your journal? My continuous writing was the most insightful thing. Don't ever miss a day. Don't miss a day, because you can. Keep writing, even on days that you don't want to, and even on days where you feel like you don't need to. Keep writing. Always consolidate your thoughts. Today's quantum computing day for NVIDIA. Do you think it's going to be sell the news? Probably. It all depends on how NVIDIA is going to react, or investors are going to react. Because NVIDIA's gapped down to only come back up again, all right? And we do have any speculation on Trump coming today. Wait there. Is Trump going to be saying anything today? So we don't really have anything in that sense. Yeah, I'm not really seeing anything for Trump. No. Russia-US talks to be held in Saudi Arabia March the 24th. So, okay, yeah, that's it. There's nothing really happening there. Anything else, ladies and gentlemen, before we make it an exit? NVIDIA will change the future for brothers. Okay. Anything else other than that? I'm starting to learn TA. All right, hold on. Turtle Mug. Hello, team. I'm starting to learn TA. What should I start with when I look at a chart? Top-down, market structure analysis, daily EMA. Could you give me some basics? Much love. All right, listen. If you are new and you haven't done so already, just get to tradersreality.com and do this free course. That's going to explain to you the moving averages, market makers, and EMAs and all that stuff, okay? And there's segments right here on that, all right? Once you've completed that, then you're going to say, all right, I want to advance more in my learning. That's when you become a platinum member. And that's where you get the context of the hybrid system. You get these checklists. These checklists are various ways that you can actually trade the hybrid system. Right now, we're going to be trading, again, the Brinks box. This is the Brinks box checklist, okay? And when you go into it, it gives you a breakdown of what the Brinks box is all about. So if you ignored everything else and you took this free course, okay, and then you went on to become a platinum member and you just focused on the Brinks box, everything you need is in this checklist. And if you stick to it, if you systemize your way of thinking, the hybrid system will net you a return. It's not going to be 100% of the time. I ain't setting you no BS dream here. It's not 100%, no. But it improves the odds of you understanding how likely price is going to navigate from one point to the next based on the exercises and the context that's inside of this checklist. And there's many more checklists on that on the Traders Reality website. Like you've got the block trade principle that I spoke about at the start of the live stream. You have that right there. It gives you everything about the block trade principle that you need. Okay, cool. That's in the description of the live stream, ladies and gentlemen, if you want to explore that for yourselves. All right. Okay, then. Now, other than that, mad love and respect. And I'll be tuning into you all later on.